Welcome to Theo Trade. This is Don Kaufman. It's July 26, 2017, doing the Theo Night video. Markets today are massively unchanged with the NASDAQ futures once again flying to the upside. Right here, right now, we are waiting for Facebook's earnings announcement. We'll come back to that here in just a moment. Clearly, this is going to be impacting the NASDAQ futures, of course, in the after hours. Now, let's get back to the fact that the S&Ps, what have they really done thus far this week? Okay, and let's also not forget the fact that there was an FOMC announcement. What did they announce? Absolutely nothing. So thus far this week, we have Monday, Tuesday, Wednesday, and we have been largely unchanged. Now, this might look, and I'll zoom in over here, but this might look like a little bit of a trend to the upside. But let's put it in a bit of perspective. We ultimately started the week at 2470, and here we are at 2475. What have we seen? It's been a 5-point range. And folks, if you've missed some of the intraday trade this week, well, I wouldn't say you've been missing much of anything. But lately, I've been getting a lot of emails, a lot of questions. You know, people are starting to look at underlyings like, for example, Facebook. And again, we're waiting, for the earnings announcement over here. It's going to move the NASDAQ futures. We'll see it come out when it does. But lately, I'm getting a lot of questions about valuations of companies, and I want to kind of reflect on that here for just a moment. So for that, I'm going to go like year-to-date daily. So we're going to look at, we'll take Facebook, for example, year-to-date. Then we're going to switch this over to show price as percentage, okay? And I want you guys to recognize, like, what's going on in the market right now. It's nice that once in a while you kind of stop and you look at underlyings on a percentage basis. And if you take a look again at Facebook, and we'll start with Facebook, it's up 41%. Now, for those of you that are trading, if you're in this position, you're out of this position, sure, you can trade, Facebook from the bullish or bearish side, but a lot of people are having a very tough time with the argument, what do I buy right now? And listen, I totally get it. What do you mean? What do you buy right now? Are you going to go out, like if you wanted to buy and hold a particular product? Now, yeah, we focus a lot here at Theo Trade on trading. We focus on intraday trade. We focus on this mid-duration trade, and do different strategies like the tetrapod spread and straddles and strangles and, all kinds, of different spread trades, but neither here nor there. At the same time, okay, and you can see Facebook's out. It's not good right now. I'll show you that here momentarily. But at the same time, if you want like a buy and hold over there, can you make a good argument to buy something and hold it that's already up 41% year to date? By the way, it was up 41%. There's Facebook in the after hours, and it's, I didn't see it here in Facebook, but I'm watching the NASDAQ futures, and in the after hours here, they're getting rocked. But hey, listen, the day is young. The expected move on Facebook is just shy of $7. That means it should be, where's it really going to go? Maybe down to like 159-ish. Okay, look at the irony of that. It was a $7 expected move. It should be right around 159. And I'm just, rough and dirty math over here, right? We take this almost $7 expected move. We subtract it from the last price. What does it leave you with? Exactly where the product is trading right now. That's efficiency of the marketplace these days. Doesn't mean it's going to stay there, though. You never know. Zuckerberg comes out, makes some comment. It's hideous. The stock drops another $30, $40. But I want to go back to our primary point over here, that if you look at something, and again, let's take this, let's change it into percentage terms, okay? And let's just look at it. And year to date, it's just a time frame, right? I'm looking at it over 9 months, but year to date makes people, a little bit more comfortable. Define the time, it's up 41%. You look at something like Amazon over here, and the emails that I'm getting, and Amazon's up, 40%. It's obviously into earnings tomorrow. The comments that I'm getting is like, how could these stocks still be going up if people are not like quote unquote investing? Because if you look at this, like, do you legitimately want to go out and buy? Forget about that it's the all-time high today. Forget about that. But do you want to go out and buy something that's already up 40% year to date. And you have to realize what's driving the markets today higher. When you look at a product that's up 40%, we have to stop thinking about these classical ideas, okay, of buy and hold. Yes, there are people, okay, just like you and me, that are buying and holding stocks. But something like Amazon, it's going up for reasons other than this thought of buy and hold, okay? Products can get driven higher because other products drive it higher. And I'll give you an example. If the NASDAQ futures rally because of some trading firm that's just simply buying NASDAQ futures, you can have a trading firm that's buying NASDAQ futures and turning around, okay, and selling options, okay, against that, and they're using the NASDAQ futures as a hedge. If they buy NASDAQ futures, do you realize that'll actually drive Amazon higher? Or you could have a firm that's trading options in Amazon, okay, and to hedge those options, they have to buy Amazon stock, which drives it ultimately higher. So some of these classical ideas of like why stocks are up in valuation, recognize they get thrown out the window. Okay, but I understand that the emails that come in, and I agree with you 110%. Like, how do you go out and mentally want to buy something that's already at, not only all-time highs, but up 40% year to date? Whether it's Amazon, whether it's Google, okay? Google's fallen by the wayside. It's only up 20% year to date. Whether it's Apple, Apple's up 32% year to date. Again, we'll come back to Facebook. Facebook, it's not up 32% year to date anymore. So backed off, rallied a little bit over here. Or something like a Netflix, up almost 50% year to date. Okay, shall I bring up Tesla? Do I need to bring it up? It's up 60, percent. Are there still products out there, okay, where you can find, valuation? Are there products out there that are reasonable? And yeah, there's some products actually that are not even performing well this year. And I'm going to start with some of the, like here, General Motors. What is it doing year to date? Absolutely nothing. It's relatively flat. It's up like 1%. Pays a dividend though. Okay. So with the dividend over there, and it's, worthwhile taking a quick look at the div, you realize that GM, which is not moving, is paying a 4.2% dividend. Why is that interesting? It's interesting to me because the 10-year, okay, the 10-year notes, for those of you that are unaware, the 10-year notes, they're right on my screen here, ZN. But if you take a look at the TNX, which is what? The Treasury Index, it's showing you ultimately what that Treasury Index is at, okay? That's only paying about 2.2%. So the interest associated with something like, the dividend associated with General Motors is over 4%. And yet you don't see a lot of people diving into this particular product. Now, to open it up on a longer chart over here, over 5 years, it's done much of nothing. You could also probably make an argument, okay, for Ford. Now, if I bring this up, of course, what you're going to tell me is that, yeah, but these guys are not performing that well. GM is not performing that well. If you have to question GM or Ford in their performance, don't you have to start to question that the S&Ps are at all-time highs? Since they're the largest car manufacturers in the United States and world, respectively, okay? And again, either they're the largest car manufacturers right up there with Toyota, Tesla is still worth, okay, as much, if not more, than a Ford or a GM, which is pretty shocking over here. But if the car manufacturers aren't doing well, how's the economy doing? And that's exactly what the Fed even mentioned today. Well, they're probably going to stave off raising interest rates again till December because we're really not sure about the 2%, growth rate out there. Nevertheless, you look at something like Ford, if you're looking for valuation, the dividend on here is almost 5.5%. Nothing is paying anything near that. And yeah, it's an $11 stock. Now, again, this is a 5-year. As I was mentioning a little while ago, though, look at it year to date. And again, to drop down to year to date, just go year to date, daily, okay? Throw over here, show prices percentage. Again, it's important, I think, that we talk once in a while about more duration investments. And this is down 12% year to date. But hey, 12% doesn't look so bad when you have a 5.4% yield. In addition to it, even though they're very, very minimal premiums, okay, you might be able to go out, in time and actually sell something against this. Again, covered calls and so forth. It's not going to be too appetizing in an $11 product, but it's important that we understand that there's still, some valuation out there. Okay. You look at something like GE. Nobody's even talked about GE in probably 10 years. Okay. Since, the financial crisis, you haven't really heard anything about GE. It's almost a 4% dividend yield. So I'm looking over here, not at what I would just call like, relative value. By the way, GE year to date, just so you're clear, down 20%. Right? And I don't think these guys are going out of business anytime soon, right? It's still GE, it's a $25 product. And again, if you bring it up over the last like 5 years, okay, you're talking about, again, you have to go back all the way into time frames of 2013 to see a product at this price. So again, when you're looking for, true valuation, look a little bit deeper than your Facebooks, your Apples, your Googles. I'm not saying that GE or GM or Ford can't take risk to the downside. Okay, but with all due respect, when a product's already down 20% year to date, okay, hey, at some point you have to look for value plays in a marketplace that's completely fixated on nothing but insanity. And that's what we're seeing right now. And, people question, the idea of a bubble. I'm not here to question whether the NASDAQ is in a bubble. I'm here to find value. And again, quite frankly, it's not in a stock that's up 40% year to date. With that, Facebook here in the after hours, it's almost unchanged. It sold off a little bit, rallied right back. Nevertheless, it's a long way to go to the conference call over here. But on the docket for tomorrow is going to be, what I really think is going to be rocking the markets, and that's going to be Amazon. And Amazon's teeing up for a $40 expected move. With that, I want to thank everybody for joining us here at TheoTrade. Have a wonderful evening. Bye-bye.